All right, well, the largest IPO in history is about to taxi out onto the runway. And our next guest, he actually built his banking career by advising clients and then valuing some of the highest profile IPOs out there. He then made his way into venture capital with stakes in, well, some of these years' largest IPO names, including SpaceX. And he joins us right now, Paul Abrahimzadeh from 1789 Capital. And Paul, before we talk about your current role, I do want to talk about your past, particularly over at Citi, leading the syndication desk there. You were the guy that when the investment bankers got done with these IPOs, they handed them off to you to find a way to execute and price this stuff into the market. We're talking about potentially $75 billion raised, almost close to a $2 trillion valuation that this street is going to have to absorb. Are we ready for this?
Thanks, Romain. Great to see you again, and great to be back on Bloomberg TV. We do think the market's ready for it. I think it's incredibly well-timed. Ultimately, this is a platform play. SpaceX is a pillar business across three important divisions, all of which have very strong growth, as people can see in the S1 that's been filed, very strong historical trends, and obviously the company's poised for growth on a go-forward basis. So it's a must-own name. The KPIs speak for themselves. There has never before been a company going public at a $2 trillion market cap. There's never before been a $75 billion IPO. It's 3x the second biggest IPO in history, which also was a technology IPO in Alibaba. Mm-hmm. And there's never been a company with these kind of KPIs. When you look at the historical last 12 months, the revenue scale, the 30% plus growth, the EBITDA margin, again, you get back to this concept of being a must-own name. The big factor is obviously the size, and the reality is the market has been positioning for this IPO as well as the two other large IPOs expected this year. So there's been pre-positioning in the market. People have been making room in their portfolios, adjusting their exposures to have sufficient dry powder to invest in IPOs like SpaceX. Yeah. If you think about the prior jumbo IPOs, the biggest end of the spectrum you would see from an order flow standpoint historically was $250 to as much as $500 million. In the case of these large upcoming IPOs, you're going to see order sizes from the bigger mutual funds, pensions, and sovereigns. So we do think there's sufficient dry powder. We think the bankers are doing a great job in the way they're positioning the business, and ultimately will do a fantastic job with global syndication.
At what point, Paul, does SpaceX stop being compared to its aerospace peers and maybe being compared now to critical infrastructure? And what does that do to valuation and maybe oversight?
Well, again, I bring it back to the first point, which is this is a platform play. So when you think about the space component of this business, over 80% share with regard to the global mass to orbit industry. That's massive. The TAM is also gigantic. The space and connectivity TAM alone, as disclosed in the S1, is $2 trillion. And this is an overall business, an enterprise with north of 30% EBITDA margin. So at this close to $20 billion revenue scale on a 12-month basis, on a trailing basis, with that type of EBITDA margin, levered to industries like space and telecommunications with Starlink, it absolutely is a fit from an infrastructure standpoint.
I am curious about this idea, and I mean, we should just be clear. I mean, this is kind of one of these must-own stocks, where no matter how you feel about the fundamentals, no matter how you feel about the governance. But I do want to ask you about the broader ecosystem in space, AI, et cetera, and whether this actually sort of unlocks that a little bit more once we actually get this IPO out there, or is it going to have the opposite effect, where it's just going to draw a lot of oxygen out of the room, given its size?
It's certainly a possibility. Again, there's never been 3 IPOs of this scale to go public in a single year, let alone in a multi-year period. So we're in unprecedented territory. I think what you're seeing is the private market is showing that there are some constraints in terms of the ability to fund high-growth companies at this scale. Obviously, the recent private round by OpenAI is the biggest ever done in the private market by a magnitude of 10 relative to the Ant Financial private placement that was done about a decade ago. The questions as it relates to the business and AI. We invested across 8 tranches of SpaceX, XAI, and X from our fund at 1789. XAI had material cash burn. The beauty of this combination with SpaceX as well as X is you've got cash flow coming out of the overall enterprise that can fund the growth in AI. So specifically when you look at CapEx from the overall company, north of 60% of that historically is being spent to now grow XAI. And that's going to be a gigantic growth lever for the business. It's where the market's heading. It's been a multi-billion-dollar revenue business, but with dramatic upside. And the TAM in AI, what's interesting, it's 10x larger than what you're seeing from both space and the communications segment or connectivity segment combined. That's an incredible TAM, and the company's going to be going after that. Competitive, obviously, with OpenAI and Anthropic and others, but we believe in XAI's ability to capture share.
Paul, always appreciate it. Paul Abrahimzadeh, partner over at 1789 Capital and a stakeholder in SpaceX as we continue to focus in on that.